The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look here this morning at the NASDAQ. As you can see, I posted the first chart, which was our theme of the week, that we were getting ready to make what I think is going to be the top, THE. And whether that is going to be the case, CASE, I'm not sure. But it's got some things that are very, very interesting. Several people have asked me about the indicators that I use. I really don't use any indicators, but a few things that I've learned over my 60-some years of trading. I actually did the first trade, 1959, was elastic stop nut. But Larry Williams once told me, this was going back, oh my gosh, 40-some years ago. I've known Larry, wow, it's been 53 years I've known Larry Williams. Anyway, if his favorite trade was 100%er, and that was called the telephone trade. This goes back a long time when we used telephones, but if you saw a trade that you were in and you took your little handheld calculator, the old Texas Instrument, whatever it was, and you start calculating how much money you were making, the 100% trade is to set that calculator down to the right, pick up the telephone, and get out of your positions, because your greed index just hit tilt. And that thing, if you go back and look at your own positions, folks, I'll tell you, it might not be 100%, but it's really, really close. So that's an interesting one to take a look at. We had several things from yesterday that people have asked me about, and one was the, of course, we were talking about the four stocks that we were looking at, which were Twitter, Facebook, and Tesla. All of those have broken down quite a bit. As a matter of fact, you'll be able to see here that the, let's just get this latest one up, that we're trading below some of these things here in the, hold on. Yeah, that's another good one from poker, that's for sure, Mr. Z. The Facebook is still going down. Twitter has broken badly. You know, we've really shattered some major support. That's telling you it wants to go another 15 or 20% lower. Folks, all of these stocks, other than the few stocks, you know, that are in the Dow, the real expensive ones, and then the few NASDAQ stocks, and even those big NASDAQ stocks are starting to get hit a little bit. Now, Amazon hasn't gotten it yet, neither has Apple, but you know, that might be something to come in the future. I'm not sure. We'll have to wait and see. But those are just some of the things that, you know, we're keeping an eye on. Another theme that we had for the week was the fact that the S&P 500 was making that big ABCD. We recommended a short here on Monday, if you'll remember, at 29.05. And now we're down 40 pips, down about 40 handles, down at 28.65. That's a really important number, folks, because you'll notice that's a 50% retracement off of the low. It's also a really nice three-drive pattern on the daily, and that's pretty much, yes, sir, you have to count the losers. Amen, brother. I didn't have many losers this week. As a matter of fact, the sugar was a really big one. The stocks was a good one. The volatility index has been a good one. The hogs have been extremely good. You know, we're in the midst of that thing that our good friend Rich Anderson talked to us about, and that was the, you know, that hog thing with the, I forget what they call that thing, a swine flu or whatever it is, and they've gone, you know, pretty much ballistic. You can see here in December hogs. Now, when you look at this, the red one that you're looking at is the one that we predicted for the what we thought it was going to get to. Now, as you can see now, we've broken above those highs. That suggests that ABCD up another 6 cents up there at 62 cents. When we were down there at 44 cents, that was right at the cost of production. And now we're at the same thing. Now we're looking at the only position we have left in the grain markets is the corn. So we're waiting to see if that is going to hold up. We're in a break-even position in that. And so these are some of the things that we're looking at here this morning that seem to be in the plane to look at. Anyway, here's the you'll see the corn market here. We had a nice little rally off of the Gartley pattern down there at 58. We got as high as 70. And now we're trading at around 63. We still have a $300 and some profit, and that's got to be at break even. And make sure that, once you get a nice profit in some of these, folks, you got to put your stop at break even, because you don't know which ones are going to work and which ones aren't. That's the whole key, to why you're looking at some of these. So that's a very, very important thing to remember. Another one that we want to look at here, hold on one second, that I think is very, very important, and that is the Hang Seng Index. I just wanted to bring this up because we have so many of our friends in Hong Kong that watch the patterns and everything, and what we've done now is we've gone substantially below the 26,000 level. We did that last night, and it looks like we're continuing, to move lower. And that's not a good sign, from a long-term perspective in some of these Asian stocks. And if we looked at the stocks of the emerging markets, gee, they look absolutely horrible. If you just take a look here, this is the EEM, which is the ETF for the emerging market. You can see here, this is a beautiful chart for technical purposes, but you'll notice here that, we're heading down about another, at least another 5% down to that 40 level. But the key level to look at here, folks, and we really highlighted this way back in July and August. If you'll notice that time period between May and July, and this is a daily chart, it's squeezed up a little bit, but I've marked it in that red box. This was really important. In fact, we were mentioning it several times, but you'll notice how we stayed at that 78% level for well over a month. And look what happened when we broke out of that. That was a very high level consolidation, extremely bullish. And that's something that I think is important to look at. Someone's asked me a question about a book on technical analysis. Folks, if I had to buy one book on technical analysis, given my experience, what I have is I would pick John Hill's book. I think it's called Commodity Trend Analysis. He wrote it in 1965 or 66. John's still trading strong at 90. I think John just turned 93, and his 3 kids are still trading. But that's a great book. It's a little paperback. Well, it's soft cover, but it's 8 by 12. But it's a great book. Fabulous patterns. In fact, all the patterns that are on the painting behind me in my room here come from that level. Trade What You See was good, but that was written 25 years after John's book, and that's the main thing. So anyway, it's a fabulous book. I don't like Edwards and McGee that much. Edwards and McGee, I really don't. I mean, I've been through the Edwards and McGee book, and it's a pretty good technical book, but I personally like things that I could use in my trading, and I never could find out much about the Edwards and McGee book. After you look at the patterns and the ratios and then look at Edwards and McGee, and then I think you've got something. That's my opinion. I don't know if you remember this, but Edwards' father-in-law was John Schaubacher, who was one of the original guys. That's it. Anyway, we'll take a look here. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, David has put the name of that book on there. It's Commodity Market Trend Analysis is what it is. And it was from 66 was the year. But, he's the reason that I accumulated a library. I met John in April of 1970 at the meeting for the Hearst cycle stuff with CompuTrack in San Francisco. And for some reason, he befriended me, and we became very, very good friends. And I've been to his home many times. He's been to my home several times. But just been a wonderful experience knowing the man. He's really a fine man. So anyway, he was the reason why I accumulated a library. When I got to work at Drexel, one of the things that I had as my perk was anytime I had a very good month, which I had quite a few of those, I was able to take excess money to buy any books or to attend any seminars or anything that I wanted to do. Drexel always picked up the tab for that. And then when I left Drexel, they said, take the books with you because, we don't have any use for them. So that was very nice of them. But anyway, take a look at that book. It's a really good book. And basically what it was is John went through some of his old books, that he had from Wyckoff, Richard Wyckoff and Schaubacher and some of the others. And there was a book in there by George Cole, The Key to Speculation, C-O-L-E, and that's a very rare book. But it had all these little patterns in it. That's where he got his spring reversal patterns and, stuff like that are in there. And those I give little names like butterflies or Gartleys or things like that. But that's pretty much, what that's about. Anyway, hope that answers the question that the folks were asking about. So we need to watch it. One other thing that someone asked me about was the fact that when we're looking at some of these markets on a longer term basis, what are the patterns that I'm seeing? We've highlighted those so many times that I don't think I want to do it again. But we're up in this area where we could have a little bit of a correction. Now, whether it's going to be much of a correction or not, you have to wait and see. But let's pay sort of close attention to it because I posted that chart for the E-mini S&P. And as you can see here, our price objective on this run here comes in at 28.65, and our low today so far has been 28.66. So if it can do that, then it's something that could be, very, very interesting. Maybe it's not. I don't know. we'll just have to wait and see. Now, one of the other themes that we had this week coming into this week was the fact that the crude oil market looked like it was ready to be, heading down. And so what we were doing here is if you'll take a look here, you'll be able to see what happened here with the crude oil. You'll be able to see that we went up and hit the exact 61% retracement. We went about $180 higher than that level, and we immediately broke well over $3,500 to the downside, as you can see. And this is very important where we are now, folks, because that crude oil down here at the 67.20 level is sitting right at that 61% retracement. So anything below 66.80 is going to tell us that we're heading down. So keep an eye on it, because it's a very interesting pattern. Completed all the numbers as we expected them to do, and whether that's going to continue that way or not, we never know that. But we never know that on any of the things that we're looking at. That's for sure. And just remember that it's all about probability. It's not about certainty. It's not about the money that you make. It's about the money that you don't lose. So remind yourself of that, each time you're out there in trader land, to keep an eye on, some of these things that, we're looking at. There has been some talk on the financial circles this morning about what's happening with China and the fact that their reserves are, in big trouble. We talked about that earlier in the week. I showed the long-term picture in the reserve. I just wanted to show you what's happened during 2018, because this acceleration has started to increase, and that is a very negative thing. And the next thing you want to see is that Chinese renminbi trades above 7. Folks, that is going to be the shot across the bow in the trade wars, if that in fact does happen. So that would mean that the U.S. dollar is going to, increase rapidly. And as you can see, the euro has backed off from those levels that we talked about yesterday, up at that 116.40 level. And now we could be looking at, much lower prices in the euro, which in fact we've already seen that. If you just look at the chart from today, we've broken down below the 61% retracement. It was coming down very, very hard, and now we've gone down all the way to the 78% level at 115.60. If it fails that, then you're going to be looking at a pretty substantial move to the downside. So those are just a few of the things that have been going on here to look at, but we'll watch the rest of them as we go through. We're here on a Friday, so we'll be back Monday, and we'll want to watch some of the things over the weekend, because this is how we set up what we think are the best trades for the coming week. Sometimes they work, sometimes they don't, but those are the ones that we are, sort of paying attention to. That's neither here nor there. Okay, now the question that I had to ask, or someone's asked me, is about this Australian dollar. And folks, we have broken down. Let's just get it up here with the news this morning, whatever it was. We are back down here one more time, down to this 71.40 level. We got down as low as 71.25 this morning. Whether that's going to hold or not, I'm not sure. But you got that big ABCD pattern in there that is just hanging on by a thread. So anything below 7,100 would tell us that this Australian dollar is going to continue to go down even more. So that's another one that needs to be watched, very, very closely. As far as this U.S. dollar is concerned, one of the themes that we had for this coming week was the fact that we were most probably getting ready to rally in the dollar. That means that the euro was going to go down. Now we've reached that level this morning here in the U.S. dollar index, up around this 95.80 level. So this is going to be really key. And here we are coming into a weekend. So this is going to be a very interesting thing to look at. And remember, on Sunday, we have this new moon coming in, and it's got a lot of stuff. And not only that, folks, it's Grandparents' Day. So all of you folks that are grandparents get to see your kids and send them home without having to feed them. Well, most of the time you feed them. But anyway, it's more fun being a grandparent than being a parent, because you don't have to pay for it, and you can send them home when they're bad. Well, Sarah's kids are not bad, so that's a good thing. Anyway, let's go on to one other question that someone else had, and that was about the Canadian dollar. I wanted to bring this to your attention because this is what happened with the Canadian dollar. We're back up to this level again, and if we can close above this 132.40 level. That means that this Canadian dollar is going to be, moving against the U.S. dollar again. In other words, the dollar will be strengthening against the Canadian, and that's pretty much it. Now, folks, when I talk about the Edwards and McGee book, that was just, it's a very good book, and it's quite thick, but the problem is that it was not the type of book that I was looking for. I was looking for books that had just patterns in them and something else that could help to describe the pattern. And that's why, yes, I would be happy to look at that December wheat chart, because that one is breaking down. The fact is, that was one of the things that we're looking at. Okay, give me a second. Bring that wheat chart.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've posted a chart here of December wheat, and I believe we're heading lower already. We've broken below that 78% level, which I think was very important. But more importantly is we had a really nice rally off of the full moon on August the 26th. And since we have this new moon coming in on Monday, if you want to be looking to buy the grains, I would wait. Until Monday. They follow that 14-day cycle relatively well, so that's something that I think is pretty important to to pay attention to. Let's talk just a little bit about what's going on in the foreign exchange markets, folks. They're talking so much about this trade stuff. Folks, this has been going on for more than 2 months, and now all of a sudden they're blaming the market going down on the trade things. Come on, give me a break. This has been going on for a long time, and they said it was going to get more trade stuff was coming on, and so that's what's been happening. So I don't think you can blame that, on the market. I believe it's just a major cycle that's come in here, and the stocks act differently than anything else, so sort of pay attention. The thing that should be really troublesome to anyone is the fact that we could be looking at a collapse in some of these commodity prices like corn and soybeans, and look what's happened to copper. I mean, copper has gotten, he's Mr. Copper, Dr. Copper has, got a really bad move to the downside. So sort of pay attention to that. That's going to be an interesting one. And another one, I believe that the whole thing is based on interest rates, because that's where I think the big problem is going to lie. This is the chart on the high-yield junk bond market as of Friday, and that market has, been coming down this week. So the interest rates have started to go back up again. It doesn't look like we're going to complete that head and shoulders pattern that we've been talking about. It just couldn't get up to that level, and now we're starting to break down below that right shoulder. That's not a good sign on a technical basis. So sort of pay attention to that. Look what happened here to the bonds here, folks. We had a beautiful pattern here in bonds, and I just wanted to show you because they had a really nice rally, a beautiful day trade yesterday we talked about, and now what we're doing is we're breaking down below the 143.24 level in the September bonds. I know it's spot month, but it's still the same thing, and that tells us an interest rate wants to go higher. Maybe that's what they're going to do to try to defend some of these currencies, but that I don't know. I'm just looking at these charts, and it's telling me that there's trouble in River City, boys and girls, to quote a very famous Broadway show called, what was that one called? Some Gary, Indiana. Oh, I can't remember the name of that. One of you smart people remind me of that, but it wasn't this, shucks, I can't remember. The Music Man. Thank you very much, Al. Thank you very much. Okay, we had a question here about one other thing that we wanted to look at here, and that was this E-mini S&P, because we're right down at this level at 2865, and if we close below 2865, folks, this is going to suggest that we're going to be looking at a price that's going to be, this was posted about an hour or so ago, and you'll be able to see what you're looking at right here. Anyway, you'll notice that there's a 50% retracement there, a 3 drive to a bottom, and if that fails, you'll be looking at, something. Yes, I did the crude oil already, Ruby, but I'll do it again for you. We believe that crude oil is at major support right here, right where we're speaking now, at this 67.10 level. This was the 61% retracement, so let's get this up so you can take a look at it. And if you remember, we had Kyle Cooper on Wednesday, and he talked to us about the fact that this hurricane was not really a hurricane, and the market just literally, basically collapsed from right at a really important 61% level at 71 and change. The high was, I believe, 71.22 or something like that. So that was telling you that that's pretty much what's looking on. I can do natural gas for you, Bob, if you'll give me 1 second here. It only takes me a second to pull up a chart for one of our regular listeners here, and we want to get that up in here. So there we go. Hot dog, we got filled on the S&P, so we'll see if that's right on that number. Okay, let's take a look at natural gas. Give me a second. Natural gas starts with an N, ends in a G. Hold on just a second. Here it is. And we've started to break down. This is good. This is good. This is a good thing to look at. Very good, because I wanted to. This will show you. Let's get this up here so I can get this posted and everything. There we go. Now it'll just take me maybe just a few seconds here to do this, and I think there we are. Here we go, Bob. We'll get it up here for you, and you'll be able to see it here. You'll notice that the natural gas went right down to that 284 level. We had a really strong rally. Then we gapped down. That was your first tip off that we were going to go lower. And where we are right now, Bob, is we're completing that ABCD pattern that you can see there from the high up there at $3, came down to 284, up to 293, and now down to 276, and this is where it should stop. If it fails here, you're looking at the very large ABC pattern that goes way back to June. That would take you from 306 down to 270. That's 36 handles. And if you subtract 36 handles from that $3 level, it's going to take you to 262. So you could be looking at a market that could drop another 15 cents from this level if it doesn't hold that. You know, write that. No, I'm not on fire. I'm just trying to stay awake, Ruby. Unfortunately, I don't sleep much during the night, especially when these markets are active, because I like to take advantage of them when I can. And, you know, folks, I don't trade, you know, really big positions. I trade enough to, you know, make a couple of bucks. Anyway, let's take a look at another market that's someone's asking us about, and that is the gold market. I believe, as you can see here in the gold market, we've had a price objective all this week. Coming in here, you'll be able to see that price objective comes in at 1194. And the whole key to that was, as long as $1,200 would hold, 1194 looked like it would have some type of a pretty good support. So watch the gold. I haven't even checked it in the last 30 minutes. So let's do that right now while we've got a second and see where we are. And we are at we're still above the 1200. We did get down to 1198 very quickly. We rallied a buck or two, so we'll see if that's going to mean so much, but we'll have to wait and see what's going on, you know, with that. Okay, now the euro came within 3 pips of the 78% level at 115.60. It's rallied about 20, not very much, so we'll watch that very, very close. That Canadian dollar is an interesting one, because with the report this morning on the jobs, we rallied up to a perfect 61% retracement. That was into the gap area. And now what we've done is we're looking at a situation where it needs to get above that 132 level to continue that trend to the downside. The key one right now, as we're speaking, is this crude oil. We're sitting right at the 61% retracement at 67.04. A barrel, so watch that. That's going to be very interesting, and that responds to a lot of different news events. So it's a really big one when it really works. So pay sort of close attention to that one if you can. So, all right, let's move on. We had another question here. Let's get it up, and then we can talk about, and that is about the Bitcoin. I'll bring this up so you can see it, folks. I think we're going to see something really big in Bitcoin, in the cryptocurrencies, not just Bitcoin. Hold on just a second. Take a break. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, I posted the chart. Mr. Z's asked me to post a chart of why I was looking at that S&P up there at 2917. That was a big ABCD. The BC swing was a perfect 38% retracement. We went up and hit it exactly perfectly, and we did it at the same time we were making those 3 drive patterns that I posted in the NASDAQ. We were doing the same thing in the Russell. The Russell 2000, I'll bring this up to show you the same thing. You can see what's happened to the Russell this week. This was the whole theme of the newsletter this past week, is that we were at the moment of truth, and whether the moment is come and gone, I don't know, but all I know is it started in the right direction. So, we'll have to wait and see. Let's go back into history just a little bit. We're talking about these cryptocurrencies, and supposedly it's all about, blockchain, technology and stuff like that. But when I first moved here to Tucson in '94, it was 1995 that I gave my first lecture at the University of Arizona. And one of the folks in the room there was a young man named Mario. He was a graduate student in engineering, and his whole area was he was really interested in the internet. And of course, nobody knew anything about the internet. And we went out for pizza, and he explained that this internet was going to be a big thing. And what he did, and this is you talk about people to think into the future. He bought all of the domain names. These were $50 a piece that you had to put your money up, but he bought all the sports teams, the www.chicagocubs.com, Chicago White Sox, New York Yankees, every single baseball, hockey, basketball, anything he could find that was going to be popular. He bought all of those at $50 a piece. And so I did, being the smart guy that I did, I bought 2. I bought the CME.com and the DowJones.com. And the CME I gave to the exchange when they tracked me down to say, how much do you want for it? I just said, here, take it. And but the Dow Jones one I sold for a pretty good piece of change. But anyway, this was forward thinking. Now, whether this Bitcoin stuff means anything or not, there's some pretty smart people that say yes, and there's pretty smart people that say no. And when you see things like what's happened this week with Goldman Sachs coming out and say they're stopping trading in Bitcoin and stuff like that and the cryptocurrencies, folks, that's just like when they came out when crude oil was $140 a barrel, saying all kinds of special report that they put out saying that it had a $200 per barrel mortal lock on that price. And I think within 48 hours, the market, rolled over and went all the way down to $32 a barrel. So just because someone says it's going to be that doesn't mean it's going to be so, and that is absolutely true of me too. So just remember that. That's an important thing, to keep in mind as you're watching some of these things unfold. I wanted to show you the Hang Seng here because we talked about it this morning and how it's been breaking. Yesterday, it had a really wild swing, folks. You can see the doji there, but the swing last night, it was sharply lower. It was down about 150 points, about 1%, and then it turned and rallied to
almost take out the previous day's high and then turn around and went back, made new lows, and then stopped, relatively close to where it opened. So this is going to be a real interesting thing to look at. But we have that ABCD and the Hang Seng Index that has certainly failed. And that is the real danger sign that I think you really need to pay attention to. So whether that continues to do that or not, we need to wait and see if that's the case. Now, I wanted to take just a second here if I can get the chart up in time to take a look at it. And there we go. Okay, good. We hit major support now on that S&P, folks. The low has been exactly 28.65. That completed the 3 drive to a bottom pattern. And if you sold that at that 29.05 to 29.10, that's 40 handles. That's $2,000. That should, be pretty good. So we'll have to wait and see if this is going to continue like this or not, but we'll just wait and see. Keep an eye on this crude oil, folks. This is the real sleeper because we're right there at that 61% retracement on the dailies down there at 6,700, and whether it's going to hold that level or not remains to be seen. The only thing it's done so far is it's gone $83 below that level, which isn't much on a contract that's worth $67,000. The bonds are really weak, folks. They're down over a full handle from yesterday. That tells you that interest rates want to go higher. So that's another thing. The other thing is if we close below 28.65 in this S&P, you do not want to be long. Let me repeat that. If you close below 28.65 in the S&P, you do not want to be long. So remember that one. That'll be one that you can we can throw vegetables at one another if that one happens to come to fruition. Someone's asked me a question about what's happening with these tariffs. Folks, I know as much about tariffs as I do cryptocurrencies, which is nothing. I know how to look at a bar chart. If there's more selling, prices are going down. If more buying, prices are going up. You can look at it today. Just look at Treasury bonds. We're down 1.5 handles, folks. That's $1,500, and that's where we got up to a beautiful 382, and then we broken down. That tells us that this head and shoulders pattern is no longer valid, folks. So watch it. That's going to be all I can say. It should be very, very interesting to look at. Now, one final question. I'll finish up with this thing. They asked me my favorite trades over the years. There's a lot of them, but probably the single most that I remember, probably the most vivid, was in October of 1980. I was at Drexel. I was handling, it was basically a hedge fund is what it was, and I was running that I ran it for 5-6 years, and we'd had a fabulous year. And gold had topped in January at 865, went all the way down to 400, and rallied back to a 61% retracement at around 708, 709 on the weekend that Friday. And so I had sold 400 contracts for all the customers across the board. Back in those days, each of the customers' accounts were segregated. You couldn't put them into a large group, and so each one had their own account. I could put them in as a batch order, and they were allocated automatically. So I had over 400 contracts short for the customers that I was in, and I was up at my usual time at 5 in the morning. Gold opened at 6. It took me 22 minutes to get to Beverly Hills, and the Charles Osgood would come on to KNX 1070 in Los Angeles with the morning gold fix that they had at that time. He said, "Ladies and gentlemen," he said, "Iranian jets have hit Iraqi airspace. They've knocked out a nuclear power station. War has broken out in the Middle East. The price of gold is soaring." And here I am with a razor in my hand, wondering whether I should slit my throat to the left or the right. I said, "Oh, no, I got to go through this thing again." The first thing in my mind, I calculated $100 an ounce times the 400 contracts. That was $4 million I figured I was going to lose out of the almost $20 million that I was managing. And he came back on, and he had all kinds of commercials. He had things about, a crocodile somewhere, wherever it was. And then finally, he said the price of gold in London is soaring. It's been fixed at $2.65 higher. And I didn't even finish shaving. I just threw on my sweat clothes. It was a Monday, which we had casual Friday, but never a casual Monday. So by the time I got in, it was real early, and I wanted to see what was going on when my boss came in. He thought I was getting ready to quit. But anyway, it opened limit down. Anyway, we'll see what happens. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the chart of the Treasury bonds showing the bearish pattern that was there. We had equal moves, of course, and we have broken down below any possibility of that head and shoulders pattern that we talked about in the newsletter last week. Once we took out these lows, it was a very, very significant spot, so that means that interest rates are probably going to go higher. Whether it has anything to do with stocks, I don't know or not. I also posted the chart of that Dow, or the mini S&P. It shows the completion of the 3-drive pattern down there at 2865. So far, that's been the low. We've rallied up 10 handles since that point. Anything below 2865 is just incredibly bearish. And if you get a rally up to 2898 in the next couple of days, I'd certainly kind of keep an eye on that because it shouldn't get much higher than 2898 to 2900 would be my guess if this bearish scenario that we're looking at means anything. When you're looking at this E-mini chart, if you'll go and look between the 8th and the 15th of August and compare where we are between the 29th and the 7th of September, those moves are exactly equal, folks. If just the fact it might be a coincidence, but maybe these markets do repeat with some degree of accuracy. So keep in mind that it's all about probability. It's not about certainty, and it's all about risk control. It's not about how much money you're going to lose to make. It's how much money you don't lose, and that's the key thing, to sort of keep an eye on. In fact, the more you trade, whether it's short term or long term, the more your possibilities are that you're going to have losses. So prepare your trades and follow those preparations that you have for your trading plan, and you're going to be, far, far better, in my opinion, over the long term. So sort of keep an eye on that. Yes, that Canadian dollar has turned, Maria, and I believe, we're already down 50 points, well, not 40 points from the high. So if you shorted that, make sure that you put your stop at the break-even point so that you don't have to risk very much at all. So live every day in an attitude of gratitude. May God bless and have a wonderful weekend.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!